how much the monthly mortgage payment has gone up. So somebody who's looking to buy a house for 250,000, putting 20% down with a 30-year loan. If right now, if they're buying a house, again, I mean, this is 7%. I'm using 7%, but the interest rate is actually 7.25 or something, but I'm just going to use 7% for this purpose. So the monthly mortgage would be about 1,577, and we're in November right now. And then the same house, $250,000 house, somebody putting 20% down, if they were buying at the beginning of the year, their mortgage would be roughly $1,100. So that's almost a 50% increase in their mortgage since the beginning of the year. Again, I know some people who at the beginning of the year who got interest rate for even less than 3%. I know some people who got like 2.5% and 2.75%. But if you look at 3% at the beginning of the year and then 7% now, the monthly mortgage has gone up significantly. Like it's gone up about 45 to 50%. And just to kind of show you how that plays into somebody making, about 51,000 per year, and these are like rough numbers. I didn't include any maintenance expenses just for the calculation purposes. Somebody making 51,000 at the beginning of the year, they could get a mortgage interest rate of 3%, and they could afford to buy a house of $328,000 with income being the same, assuming same income level at 7% interest rate. The same household income would only afford $250,000 in purchase price. So that's a pretty significant drop. If you look at 328,000, it's dropped about almost 80,000, which is a pretty significant drop from somebody making 51,000, the house they could afford at the beginning of the year versus what they can afford now. So eventually, I think I don't think we've seen the complete slowdown. I think there's going to be some good opportunities in affordable housing. So again, somebody who could previously buy a house for about 300 to 350,000, that family still wants to own a house, but they cannot afford a 300 to 350,000 dollar house anymore. But those houses are eventually going to come down a little bit in the price, and then they might not be able to get the exact house they would have gotten at the beginning of the year, but they'll get a pretty similar house because the house that was selling at the beginning of the year for 328,000, it's no longer selling for 328,000. Those prices eventually, the interest rate is going to put pressure on the home prices, and the home prices are going to come down. So I thought this was pretty interesting numbers to look at. Going from 3% to 7% right now. That's the bump of about 50%. And you see that on the based on how much a mortgage somebody can afford. Again, people are buying houses not based on, a home price. The home price comes from how much mortgage payment they can afford, which comes from how much income they have. So put another way, somebody who's buying a house who could, buy a $250,000 house and pay like $1,100 in mortgage for them to buy the same house with the same income. They're paying additional $500, roughly about $500 more in mortgage payment. So in terms of how much extra income they would need to have about $15,000 to $20,000 additional income per year in order to afford that house. And then this is somebody making about, $50,000. So they would need to get a significant bump in salary to be able to still afford the same house they could at the beginning of the year. So I know that's a lot of numbers, but I thought this was very, very interesting to look at how the mortgage payment gets affected going from 3% to 7%. And if you look at, based on somebody making 51,000, how much house they could afford at the beginning of the year, the only variable that I changed was interest rate, went from 3% to 7%. And it had a $80,000 drop on a $328,000 house that they could afford. So that's pretty significant drop, about 25% less house that they can afford. So